Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Kiko by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Good morning, everybody. How's everybody doing on a fantastic Friday? Oh, let's see what we got here. Hey, if anybody's on here live, go ahead and put your name in the chat and I'll give a shout out to you. I see that Robert is always up and early with me in the morning. So how's Robert doing today? Looks like he made some decent money. Yesterday was great with some money bags. If anybody else wants to throw their name in, James. Good morning, James. I know that guy. How's James doing today? Hopefully well. All right. As I'll look at that periodically, trying to get a rhythm here on these videos. You know, before I was doing these live, I would just, you come into the office and you hit certain charts, and I'm trying to get into a rhythm for you guys as you guys watch this, so you guys kind of get used to, like, all right, this is a routine, a good routine of how to look at everything. So anyways, things you need to know going into today. One, right, we're selling off, so stock futures are down. We're not getting, so right, it's 8:32, so we are not getting the non-farm payrolls. I was really looking, I know we talked about this on Wednesday and going into yesterday, that I really thought with the government opening up that they would have time to have gotten NFP out, but right, you can see here that, holy cow, I gotta turn those notifications down. Announcement from the BLS is nothing. So they'll let us know. So just kind of throwing that out there that there's no NFP today. I was really looking for non-farm payrolls to really get this going, but it looks like the market's volatility's up no matter what, right? With or without non-farm payrolls. So again, economic data release remains delayed. Federal Reserve outlook, right? We're going to look at that. We always look at the Fed Watch tool, right? So that's still 50-50 again. And they ratcheted it down again another notch probability where there might not be a rate cut come December. So those odds are slowly but surely dwindling. And so we'll keep an eye on that. We'll look at that real quick before we get into the charts. Treasury and currency moves, 10-year rate bumped up yesterday. Oil, right? We talked about oil. So that climbed 2.5%. We're sitting, right now we're sitting up 84 cents from the close and 1.43% right now as of in the now. So that trade, as I've been discussing, is on the right side as of now. Tesla's sharp, steep decline. We're down. We'll look at that. Maybe we'll get a chance to look at that chart. I know Applied Materials, we talked about that, right? Yesterday, the earnings came out. They're down. We did have some revisions. CMA Group, Morgan Stanley, Charles Schwab. So analysts revised some of their price targets. Looks like they revised them up, if I remember right. So there was some upward revisions despite the lackluster overall tone. I was looking at that earlier today. So as the market's declining, analysts are made modest price improvements. Again, no major news. It's delayed. EIA report is still at 10:30. And rig count at 1. Again, that's going to probably keep an eye on that for our crude trade. We'll keep an eye on that. But other than that, it's not really market moving. You got some speakers again, some Fed speakers again. But I'm going to probably, just like yesterday, not going to be very much market moving in my opinion, right? So what do we got here? What else? China's last economic release showing slowing retail sales and continued property market weakness, and European markets are lower midday, right? So I think that was up here in the headline, right? So again, this negative tone following overnight losses in Asia. Obviously we can see all this stuff on the chart. So, what do we got for the summary heading into today? Right? This commentary is brought to us by Y Charts. Set to be another cautious session amid lack of new official economic data. So I don't think there's anything in here. Tech remains under pressure. We know that, right? You look at the NQ, and the Dow was definitely falling off the cliff. This whole week from Sunday on, like the Dow was just really outperforming. And yesterday and then going into today, they really gave it all back. So, when we looked at like Monday and Tuesday, NASDAQ was kind of choppy-ish, and but the Dow was kind of running, and they kind of giving it all back. So it definitely gave a lot of gains back in the Dow. Let's get into the Fed Watch tool again. Right, this is every day, right? So a month, we know this. We talk about this every day. A week ago was 66.9%. Yesterday was 50%. And then as we go into now, we're trading, and actually this is a flip. Now we're probabilistically higher where it's stays, the rates don't get cut at all. So we stay where we're at. We're not going to get a cut. So, right? So that's pricing in the Fed Fund futures is no cut. That's right. And then a month ago it was like almost a guaranteed cut. And now, right, 30 days later, pricing and no cut. So that will definitely, I know we talked about this, and I'll be watching that going into next week, especially when I'm thinking of the legacy portfolio, right? That'll change a little bit of my tone and my adjustment in my bonds, just a little bit. If we're not going to be on that easing cycle, right? I'll make a little bit, a small adjustment in the belly of the curve. So just for me, that's just notes for myself, I guess. Just talking out loud. If we go to, I'm going to delete that. Let's go to the probabilities. And again, this will just tell us more. This obviously hasn't been updated. So, right, because this is now more of a stay the same and not so much of a cut. But again, going into, if we think of like, all right, there's still probabilistically a cut in the first quarter. So if we don't get one in December, right, we'll be watching that, carrying that forward. Whereas if we don't get one here in December, then how does the market adjust, and what are we looking for in first quarter of next year of 2026? So again, we'll be watching this as this adjusts, from December coming up and going into first quarter. Again, does this all move to the right, right? So does this all move to the right, and this moves over, right? And just kind of that cut gets delayed. Obviously, without having the news, I think that's also a determining factor. So there's a little bit of unknown unknowns. So, and then when those get known, as we get the data coming in from the government reopening, I think that'll help us out a lot. So with that said, let's close that up. Let's get into the trading, right? So the retest trade is front and center this morning, and it has the potential of our biggest win for the entire week, although it's going to have to compete with yesterday's trade. That was a nice setup. Again, reiterate a little bit of yesterday. I'm gonna switch a little bit to the charts. We're gonna flip a little bit, but yesterday we did. I'm gonna go to this trigger chart. Yesterday was again that. What were we looking at? And I talked about this, and luckily it was really off the bat where, right, I told you guys, hey, we were looking at, right, maybe a trade, a range, but I said, where would we be wrong? And it was like just a breakthrough that 68.48, and, really I, right, turned off the recording, turned the stream off, watching the market, and then that really just kind of set the trade up where it was like easy peasy of, well, that was wrong. And then you were waiting for, as we talked about, if we're wrong in the trade, how will it set up? And I was like, well, if this trade does not play out, then we were going to break down, pull back, and then boom, and drop. And that's exactly what happened where, right, it was a retest. So again, these things, hopefully, as we go day in, day out, Tuesday through Friday live, these things that for anybody new, or I guess existing, been trading, but, if you've been trading for a while and you're successful, less and less that you really need to hear these things. But anybody new trading, this is just a good refresher and to get your mindset. But, right, whenever you get these breakout, you'll get retests. So whenever there's like a range, right, they'll break out. More high probability of a retest, right, and then a continuation, right? And that's how you get the moves of trending rotations down or trending rotations up, right? It's that like breakout, retest, breakout, retest, breakout, right? And again, if you're trading in a range, how do the ranges work? They usually rotate, and then it'll break out, retest, and then it'll be like boom, it'll take off. So whenever you're breaking out of a structure, that's why so many people, they want to take the breakout trade, and they're so fear of missing out because it's like, oh, it broke out, and they want to like jump on that breakout trade. And you don't have to have that fear of missing out. Because more than likely, it doesn't happen all the time, but again, we're in a game of probabilities. So this game of probabilities is you get a breakout and then there'll be a retest, and then, right, there's usually high probability of the retest. So again, and that also helps with the confirmation, right? So you can kind of lean into that trade, right? Because that's, if it fails, it'll come back in and fail, right? But that retest is the good. I mean, that's the thing as a trader. That should be the thing that you really lean on, you know, is get that retest, lean on it. Does it hold? Do they defend? And then, right, and then go. So I just wanted to point that out, that yesterday, that really, you know, as we talk about these trades, that set it up perfectly yesterday. And again, hopefully listening to me talk about these things, right? Don't get so crutched in a bias. You have to be very flexible. Your mind has to kind of be very free, and right. And again, know when you're wrong, right? Don't let ego play into your trading. Just if you're right and you got, you know, set up, have your setups, have your rules, and then know when you're wrong. And then if you're wrong, just, you know, that's it. You know what I mean? This is just a game of, if you're wrong, get out quick. If you're right, play into that. So going into today, how are we going to trade today? Right? So, really quick, since I'm here, take a moment and subscribe to the channel if you're new and you're not subscribed. And then again, explore the resources linked in the description below. So, you know, I always got to throw that in there. So, as of 7:10 when I wrote this, right, we're almost like 2 hours past. We were down 57 points. We're now down 79 points. So definitely, right, we are gapping lower, and we are out of balance. Overnight skew, when I wrote this, was 2.53%. I'm more than sure it's more than 2.53% net short volume delta. So I'm right, just obviously from 7:10 this morning till 8:46 as now. Obviously, we've been selling lower. I'm sure that skew is probably into the 3%. Then the 2.53, maybe. I'll show you guys how I calculate that. You guys can then calculate it yourself. Just to kind of, we'll see where it's at, kind of update this kind of this analysis. 10-day ATR sits at 80.25. Again, gap rules are in play. It's kind of hard to see that, isn't it? So again, gap rules are in play. So as we open up today, day trade setup number 1, which is a gap rules failure setup. I'll be looking for that. We're going to talk about this clean 2-legged pullback, and then again we're going to talk about the retest. So as we get through pathing, and we get to the trigger chart again, we'll talk about pathing and the 2-legged pullback with the retest. And then again we'll talk about, right, as we open up, my first plan is going to be day trade setup number 1, and then I'm going to shift to day trade setup number 4 as we get into new price discovery. Key levels that we want to talk about today is this battleground around 67.65. That will, right, if we get day trade setup 1 to play out, that'll be the kind of level in which we want to watch. And on the hourly chart, again, this is kind of an hourly chart. I know the trigger chart, or as we're day trading, these are usually faster time frames, 5-minute chart, 2-minute chart. But as we look in hourly charts, right, we go from top down, right? We usually start on a day chart here, like I've shown you up above, and then we'd go from the day to the hourly, and then we go to the trigger. But 67.65 is the level I'll be watching. I'm going to also, this key reaction around 67.43 and a quarter, will show that on the volume profile, why that is important. And then, you know, again, as the day closes out, what I'm going to be watching for is, right, even though this is bearish and we got a gap right on the open, right, what's tempo like? And do we end up coming all the way back? And even though we got this gap lower, buyers step in on the open, right, we fill the gap. And then what I'm going to be watching for is at the close, or as the day is ending, you know, do we close and get above that 67.65, which we talk about here? Or, right, do we get below and hold below the 67, right? So closing and holding below 6,700, right, that'll will then carry that forward into Monday as some downside continuation. But again, the market will need to show that shift in real time. So we'll watch, and that's something that as we get into the trigger chart, I'll show you guys that pathing. Other than that, let's get right into it. There's nothing really more on this that I really want to hit. Those are the levels that we'll be talking about. So how does this all play out again as we get into the chart? Right. Wednesday, we had a high and a low. Thursday opening up, we got a lower low, lower high. And then again today, Friday, as we open up in the overnight trading session going into the RTH session, we have a lower low and a lower high. So again, we're making that right move from lower lows, lower highs, lower lows, lower highs. And then we're trading below the 20 period movement, or this is the 50-day period movement, sorry. So we are trading below the 20-day moving average and the 50-day moving average on the day chart. So again, we're finally getting a little bit of that, you know, that momentum to the upside is slowing down. This is obviously going all the way back to, this is only like a 6-month chart going back to June, right? And that kind of, and if we took this out to April, right, that kind of momentum up here at these highs is kind of waning on us. And we're getting a little bit of two-way two-way action, right? Good trading action, but it's not as easy when the market's just trending and it's like, you know, up every day or down every day. It's you know, you get a little bit of two-way action. So, you know, some days we're coming in, it's like, all right, we're bullish, just like yesterday, right? You're just kind of charting the chart as it is. But again, watching for that, you know, being able to flip and trade this price action. You know, when you get to these tops in a market, you'll get a lot more of that two-way action as the market is, you know, kind of that momentum is waning, and, you know, you're just getting more of that push-pull, and you have to be nimble. Usually in the start of a move, you know, whether it's a reversal and it's the start of a reversal and you're selling off, right? It's a little bit easier. It's like just selling every day. You're just in there bearish. Or in a reversal, you know, where you go down and then it reverses to go up and it's the start of the move, right? It's basically like, you know, easy peasy, is just up every day. As you get closer to those bottoms or closer to those tops or the end of a move, any move, right? You usually get this fight, this, you know, I call it fight club. You get this fight club battling back and forth. So you definitely have to be a little bit more nimble in your trading. We get to an hourly chart. Right, this is the, you know, this is kind of like the money maker as I get to my levels. This is where I really take a lot of my levels from. If anybody ever wants to, you know, when you look at anybody that's a client of mine, and I send you the trade journal, the actual written version, right, and we talk about, there's a section on there, the key levels. These key levels that I usually come off of, really come off of, you can see this chart number 2. So a lot of the levels will come off of the volume profile, right? And we're looking at distribution nodes, whether it's low volume, right? So LVNs, low volume nodes, or HVNs, high volume nodes. And again, this is just auction market theory, where you're trading between, consolidated volume, right? Where you get a distribution node that builds out, right? And you trade in between one, and it's a shift between. Now, in price action, they'll talk about it being a range. So it's really where you're trading in a range, and it's like one range, and then you're shifting to another range, right? And the market trades in this range. And then the market will move, and then you'll start another range, and you trade in this. Now, when you look at that on a distribution, this is where the distribution comes into play, right? And you then trade, you just leave one price discovery or value, and then you're in search to another. That's the concept of it. So again, these things help you understand the market movements. So again, we're trading down in here at 67 or 66.94, basically that 6,700 that we talk about, right? In this chart too, right? The developing, this will never have a static point of control, because this volume distribution is continual. So that's how I create this chart. So this is a continual volume distribution, and as of right now, this would be called the DVPOC. So the developing POC is 6670 on this chart. So, right, we are looking for a, that's kind of a target as of now. We're really close to it. And so again, do we get that target down to 6670? I am watching that in the now. And you can see that on this chart, we have a low volume node here, and you have a low volume node down here at that 6620, right? And so we kind of have this 6810 area and 6820 area, and then this is one giant distribution node. Now, right now, the developing POC is 6670. As I trade into, whether it be today and going into next week, and we'll look at that on a different chart, but I'm really looking for this backing and fill. So we're going to have a lot of time in the future, right, where we're going to be trading in this kind of 6740 to 6700, because we need to spend time and price and fill this in, this distribution. And then what we'll probably get is this to shift up over time. So again, I'm telling you this because I know we'll get a lot of people on Twitter, on social media, Facebook, YouTube, right? And it's like the end of days. And when I'm looking at this volume distribution, that's not what I'm seeing. I'm seeing again, I think of it like Fight Club. And again, so I'm not seeing yet where it's full on, we're throwing the baby out with the bathwater. I'm more seeing this kind of rotation, and then I see this backing and filling. When you look at these levels, it's very prominent where, we kind of shoot through it, spend time, and then shoot back down, and then we'll spend time. And we really haven't broken down below that 6620. So again, how does that play out in today? Great question, right? So even though this is looking bearish, right, I am looking for the two-legged pullback where we get a pullback up into retest. You know what I mean? Like I said, that fill back in that gap, right? And be looking for that 67, 65, and I'll be watching for that Fight Club area in that 67.43. Obviously, to fill the gap, we got to be 67.46, right? But I'm watching as price moves up into today into that 67.43, 67.46 to fill the gap. Does it give a little bit of extra push? Does it actually tag 67, 65? I'll be watching for tempo and how strong of a push that comes into. What period of the day is it in B period, C period, or D period? I'll be really watching that as that unfolds in real time. But I am looking for that two-legged pullback, right? So that two-legged pullback into today, and then we'll have to see like the tempo, like, because does this just take that two-legged pullback and that's the whole day? So the whole day is like this grinder, you know, buyers are absorbing any kind of selling pressure, but it's a slow kind of tricky move, and we get this move all the way up, or is it fast? You know, because if it's quick tempo and we open up and it's quick tempo and we get up here real fast, and then I'm looking for the retest trade. So that's how, as I showed you guys, you know, that trader, my journal, you know, I'm expecting a two-legged pullback, watching that test, fill the gap. I'm always looking for price to correct, you know, whether you want to call it algorithms or however you want to say, but there is this structure to the market. And so the market doesn't like to leave unfinished business or poor structure. It's probably the best way I could describe it. It's very mechanical in design. And so whenever you see poor structure, that's a carry forward and high probability that will get repaired. So with today being a gap, right, that's poor structure. Market doesn't usually like that. It'll repair it at some point in time. So, you know, I'm expecting that to get repaired first, but that doesn't have to be, right? We could gap. It could be a gap and go. That's part of the gap rules framework. So we'll be watching the gap and go. But whenever I see gaps, my first knee-jerk reaction is day trade type number 1 for the gap failure. And again, on these gaps, that gap failure, if it doesn't play out, right, then it's the gap and go. But the gap failure is the initial trade that I'm looking for, and then play on and so forth. But right, so I'm looking for the two-legged pullback, and then, you know, another retest of that low. This being such a big move, I would imagine, like, if this pulls back, they're not going to just give up. They'll retest that low, and then we'll have to then play that as it plays out. Like, do they retest a low and they go through it, and it's a pullback with then a breakout for another leg lower, or is it, right, it kind of holds and it's a two-try failure, and then, right, we, you know, next week we'll be talking about coming all the way up. But I'm getting ahead of myself, right? We're not swing trading this. This is just day trades. So I don't want to get too far in the analysis. Let's go to, I did want to come up, what do we got here? I want to go to this. I think this is important, this chart right here. This looks at, again, the week, this week's. So this is a weekly, again, another look, a different kind of look of a weekly profile. We usually do the weekly profile chart. This is a weekly, now this just has price chart with the volume distribution. But the one thing I do want to talk about this, and I think this is important, and hopefully you can follow along, is this is this week's, you know, starting from Sunday open. This is this week's volume profile, and what you'll see is the developing point of control is still up here at 68.73. And again, this is why I'm trying not to get too far ahead of myself. And what I'm looking for is, do the buyers come in at the open and bring this all the way up to gap fill reversal, gap fill failure, get it. This is why that 67, 65 is on my list. Is do they come in and it's like they just buy it and we get this to come up, but then it's a Friday and the move, that's it. And so you kind of get that first hour, 2 hours of trading, and the move comes up, you get that two-legged pullback, and then the rest of the day is just chop up in here, and this builds out this distribution, and then this developing point of control shifts lower. So again, in real time, I'm going to be really watching that. And so I'm watching that play out. Because if we get on the open and buyers shoot this up really quick, that might be it. It might be an early day. Because then you're going to be, dinking around, for a better words without swearing. It'll just chop up here and it'll just, ruin your day. Because here you're going to think like, oh, this is going to roll back over, and it doesn't. It kind of sticks up here, right? So if the tempo comes, and then there's a certain way I'm trying to articulate this so you understand. That tempo off the morning has to really get up here fast. And when I say fast, like within 2 hours. So by the time you get to C period, D period, we're already up here. Because then as you go into E, F, G, H, I, yada, yada, all the way to M period, you just get stuck in here. And so the hourly candle is just like back to back to back. And what this will look is on the your profile chart, it'll be a P right distribution, where it'll be thin structure at the bottom, and then this will build out, right? So it'll be like this, and then this will build out in a P formation distribution, and then this volume will build out over time, and then this will shift, and I'm really looking for that shift. So I wanted to point that out because I am watching that, and I think that's right. I'm trying to describe market, the way market plays out, so that you don't, even though you just think like today's that day and we're just gonna fall apart. I don't know if I don't know if that's the feel you should be feeling right now. It could be wrong. Time will tell. But right, the failure of day trade type 1 will then tell you that that's wrong. But if day trade setup one plays out, that's the thing I want you to talk about. If we look at this on, this is the usual chart that we talk about. And again, here's that developing point of control. So this is that same volume, just looked at in a different way, where instead of having the price chart, right, your candlesticks, this is just TPOs and your volume. So I'm expecting this to pop up, come in here, and then again, just this shift. So again, watch as today might be it's Friday. It could be, that's it. That's the move. It's an early day. The easy money is made, and then why fuck around and mess around with chop the rest of the day? Just, close the computer down, make it a green day. Real easy right off the bat, first couple hours of trading, and then, enjoy the weekend. Don't have that in your mind of, fear of missing out. You're not going to really miss anything. I think as this market plays out today, I think we're going to get back up in here, and then this is going to fill out, and then this is going to shift. And, as I talked about earlier in that report, and I can always bring that up, where how does this market end? Does it close above 67, 65? Or, right, does it roll over and then we close at 6,700? That will be the telltale into today. As we go into as we follow the same routine as we do day in, oops, that's not what we want. Day in, day out, we want this chart. Again, right, we're opening up way down here. So obviously there's this gap that we're going to have from yesterday's profile. And again, do we tag this 6680 as a tag up and kind of repair that VPOC? There is a VPOC. That's what this signals, is a VPOC here down at 6680. You know, again, how do we open up on this open in what, 20 minutes? So in 20 minutes or so, watch this that. And again, does this, I can't say it enough, right? Gap failure, day trade step number 1. It's kind of reiterating the same things. I'm just giving you the, you know, because maybe I show one chart and somebody don't get it, but then I show you another chart. And again, this is why, you know, people come into my office and are like, Jesus Christ, Jace, you got like 8 screens on your desk. You know, you got 8 monitors. And it's like, well, it's, you know, it's the same instrument. I'm just different looks. Because, you know, sometimes one picture doesn't tell the story, right? I need like 3 or 4 different pictures to really give myself a confirming, strong confirmation bias, right? Otherwise, you're going to sit around and play analysis paralysis in your head. And so, you know, me looking at the same instrument but with different looks eliminates that analysis paralysis. It really just hones in and gives me good conviction in a bias or a trade. So that's all that really shows me in this chart, is just that. And then let's get into the trigger chart and we'll go through pathing. And then we'll end it. Right? So as we go into the trigger chart, as we end today, right? Watch. So this is what we're watching. So right, these lows here, right? As we open up, that's the thing that I'm watching. How, you know, again, when I'm thinking of reversals in a trend, and again, we're on a 5-minute chart, right? So this is our trigger chart. And so as you get into here, how is it that I look at, I don't just blindly, I know some people, they're just like, oh, I just blindly buy the level. I don't do that. So I don't just blindly buy the level, because even though I have a level onto my chart, right, that could just easily go right through it. So I don't just blindly. When I look at and I back test reversals in a trend, and in this case we're looking at a 5-minute chart, so the trends are abundant, right? These reversals on a 5-minute chart usually play out where price will come down, it'll hit a low, right, and then it's like a 1 try, 2 try, and then it'll go, right, and it'll reverse. Now, in that mantra of a 2-try rule or a 2-try reversal, there's the 1 try, 2 try simple, you know, reversal. I just call it a simple 2-try reversal. But then there's a 2-try trap. So it's usually like 1 try, right? So 1 try, and then the 2 try is a trap, and then a go. So you have to be nimble about these things. So you got to watch for these. Sometimes that second try is a trap. But the one thing I'd hope that the takeaway is, don't get level happy and just buy at a level or sell at a level. You know what? You know, I see so many people, when I look at I have a problem finder that I usually give, especially new traders, but even myself. It's on my trader worksheet. And this is like a problem finder. And what I find is, if you journal, you're going to see, did I exit or enter soon or late? You know, it's literally on the, right? So on my piece of paper that I have in front of me every day, and it's a problem finder. And then as I trade, you know, I'll check off, like, did I exit too soon? Did I exit too late? Did I enter too soon? Did I enter too late? And what you'll find is most traders, what they'll check off the entered too soon. because they're so goddamn anxious to enter in, you'll enter too soon into the trade. And so hopefully I'm describing this to you as a helpful measure that, listen, don't worry about the fear of missing out. You know, a lot of times the market will give you these 2 tries. So again, watch the market. One try, 2 try, then look for the reversal, right? So as we open up today, that's the thing is, right? Do we get the 1 try, 2 try, and then we open up and it closed, or do we open up and it just tumbles again? And right, so that's why I say, like, you don't have to be so trigger happy. Let the trade set up. Now, I want to talk about this because somebody will be watching this stream and they'll talk about, well, Jay, there's V bottoms. And so people are always, they get in early. I'll get that. The argument will be, well, Jay, what about V bottoms? And they'll be, so they're always that fear of missing that V bottom. And again, maybe it's just me, and I'm just giving you my thoughts as we work through this. But whenever there's a V bottom, I never am, too concentrated, because the way that V bottoms work is it'll be a V bottom, but then it will usually channel. You'll get this grinder. It'll V bottom, strong off the bottom, right? Slams down, slams up, but then it'll grind. And so whenever you're this grinding, this will then pull back, and then, right, you can easily then buy that pullback. So you're not missing. There'll be this grinder, and then just wait patiently. You got to be patient in this game, and then wait for that. Again, sports analogy. If you were the quarterback, right, there's a setup, there's a play, right? Wait for that receiver, you know what I mean, to get clear. Be patient in the pocket and wait for that receiver to then open up. You know what I mean? So again, it's like you hike the ball, the receiver's got a defender, and let them set up, let them get separation, and then throw it. Don't just throw it into congestion. So hopefully that's a little bit of, when you look at reversals, right, trying to get your mind mentally prepared and how those play out, and slow your brain down in the trade. So anyways, a little bit of education in there, just trying to really be helpful, especially if anybody's watching these little tips and tricks as we go. But anyways, pathing, gaps, we got gap. So we'll be trading day trade type 1. So how does day trade type 1 working? We open up, right? We get maybe a little trapdoor entry, right? We open, you get a little poke below, so you get a tail, and then, right, we get a move up, pull back, move up, right? And then we chop around the rest of the day. And that's what I'm really looking for, is on the open. This is my, this is kind of like the first trade setup that I'm looking for, is day trade setup 1, and looking for the 2 try reversal, trap if I can get it. I usually like traps. And then, right, we kind of get this strong like correction of inventory in the morning, and the buyers just take this thing up, and then they get a little bit of a pullback, and then again up, and then we spend the rest of the day. So that's kind of setting up how I'm looking at first thing in the morning. As if we open up, right, and you kind of chop around in here, and this stays choppy for that first IB, right, your initial balance, then I'm looking at, this is more going to be a gap and go, as, right, you're just not going to get this retracement up, and then it'll just be mess around down here. It'll clean up this VPOC, and then, right, another move lower. And again, going back to, right, when we look at this on a weekly chart, now take this just for a second, take this to an hourly chart. But what do we have? Like, this is right? So here's last week's high, here's last week's low, right? And so we made a high and a low last week, and then this is going to be a lower high. We did not take out last week's weekly high, and then do we make a lower low, right? And so then does this just kind of come down in and we get underneath 66.50? And again, this is this shelf that I got down here, right? There's a major shelf LVN at around 66.21 and a quarter. And right, I'll be looking for that trade. So again, if day trade setup number 1 fails, right, let's bring this back in on a 5-minute chart, not a day, I need the 5-day. So if we bring this in and we zoom this in, if this ends up chopping around down here, you know, that is acceptance low at lower prices. Buyers are not interested. You know, think of it like this. Buyers are not interested at buying at this price if it's chopping around down here. And so then expect for this to then drop. And again, I'd be targeting 66.21. If on the open we really kind of stream up, again, everything on my charts tell me this is the more probable trade setup, is they really ratchet it up and it's an early trade and then you dink around. That's really the 2 trades. I really don't have, I mean, that's the pathing that I really see. It's either this is going to be a gap and go where we chop down here. Buyers are not interested at this price. It chops around in here, and then, you know, the sellers have to take it lower to then, what is it? The word that I'm thinking of? Entice buyers to come into the market. Otherwise, you know, this is going to look at, you know, this gap is going to be an inventory correction, and then they're going to jump this price up. And anybody who is short in this overnight, right, their weak hands, it'll inventory correct. This will jump up, and now we're back up into here, and then both, you'll have Fight Club. Think of it like that. You're just going to have buyers and sellers. It's Friday. Nobody's going to initiate new anything going into Friday, into the end of the week, and you're just going to have Fight Club. It'll, you know, volume will taper off as the day goes on. Everybody's going to leave the office, and right, it's Miller time. So that's how I would anticipate that those playing out. So other than that, that's the pathing ideas. That's how I'm looking at it. So again, as I always like to conclude these things, if you're vacationing, you want to come down to Myrtle Beach, you know, look us up. If you're a client of ours, we do have, I don't usually say this, but if you're a client of ours, just FYI, a perk that we have is me and the wife, we have a couple condos, not a couple, we got a few, but we always leave a few condos available. And so any of our clients, if they ever want to come down and see us or spend some time or look at real estate, you know, we don't charge you. You know, it's kind of a perk for being one of our clients. And you can, you know, we'll pick you up at the airport. And I always tell people, I always find it's just a nice little like getaway. So if you're one of our clients, Friday comes, you want to get away, get on the plane, you live in California, Texas, Nevada, you know, Pennsylvania, you know, get a little hopper plane, you know, get a plane ticket Friday evening, fly down here, we'll pick you up, stay at one of our condos, you know, hang out with us over the weekend. And then on Sunday, you know, we'll drop it back off at the plane, and you can get back home. It's a nice getaway. It's kind of a perk. So again, if you're ever looking for real estate and you're very interested in buying some passive real estate, we love short-term rentals. It's like renting hotels, basically like, you know, buying a condo and owning a hotel, right? And you get that daily rental at hotel fees instead of long-term renting, where you're, you know, capturing $1,000 in a month, and instead of capturing $1,000 in a week. So we love short-term renting. that's something that you're interested in, give us a call, you know. And again, we will wine and dine you. We do have a white glove service, and that includes the condo. Again, if you're interested in trading and you live in and around Myrtle Beach, we have an office here. It's 100 Sutter Drive, Suite 101. You're more than welcome to stop on in, shoot the shit. We love talking markets. I love talking trading. It's a passion of mine. I love managed futures, active portfolio managing. If you want email, you can email us at info@teamdaytrader.com. The trading website is teamdaytrader.com. Portfolio construction, legacy investing, private equity is priestcapital.com. Other than that, phone number is on there, the office phone number. If you're a client, you get my cell number. You can call me on my cell. I know James, if James is still watching, he's got my cell phone. You know, man. Anyways, hopefully you guys have a great, fantastic trading day today. Be nice to anybody out there, right? The world will beat you up, so you don't have to beat yourself up. People will do it for you. So be nice to yourself. Be nice to other people. And with that, as always, learn, trade, profit. And I will see you guys.